We're joined now by Bill Baruch, president of Blue Line Futures. He's got some commodity trading ideas for the week ahead. Thanks so much for giving us the time, Bill.
Thanks for having me on again today. It's a great time to join you.
So you are bullish oil, but you're not necessarily buying today's rally.
No, the time to be bullish oil isn't today. I mean, you're getting the peak news flow today. I'm not saying we can't go higher, but it's $100 has been our target at minimum, and then really looking at this rally in general is not going to stop until we get some $5, $10 days and some real pain at higher levels. But I think where we're looking at previous highs in this current contract, April futures, 93.50 to 93.83. We need to close above there today to confirm the next leg. And if we don't, I think we could see some selling. And as this March contract rolls off, it creates some repositioning. And I think that could bring a buying opportunity.
Right. Longer term, though, you are bullish oil, Bill?
Yes, longer term, I mean, we have been bullish oil. So, I think we're in the middle to moving into the later innings of this rally. But I remain overweight energy stocks, and I'm looking for a place to go long or reposition in futures or futures options.
What about gold? You say you're bullish gold, but you're also not buying today's move up.
Yes, gold's moving into a big resistance level, 1920 to 1930. And this area is what we call in our morning research notes, rare major 4-star resistance. And I always say, you don't want to be buying gold when everybody's screaming for it. That's when you want to be capitalizing on gold that you already own. So for gold here, I've trimmed a little bit, and I'm looking for a good buying opportunity right where it's going to bring pain to those who chase it into today's highs.
Right. So gold, 1920. Let's maybe put up that 1-year gold chart again. You think it'll have trouble getting above 1920?
Yeah, 1920 to 1930, you have a number of resistance levels aligning with previous peaks, retracements, and the failure going back to August of 2020. So I do think that there's some good technical resistance, but then we're also seeing the geopolitical news already play out. So if those tailwinds are geopolitical right now, as crazy as it sounds, we're moving. If we don't have certainty right now, we're moving closer to having some certainty on the geopolitical front, rather than say a week ago where things were maybe even de-escalated from where they are now. There was much more uncertainty. But I think the bigger driver is going to be the Fed. And the Fed, as I've talked about in our research notes, seeing 7 rate hikes nearly priced in with the 50 basis points probability is basically peak hawkishness. You can't get much more hawkish than that. So I think as that hawkishness erodes a little bit through the middle part of this year, and inflation-based comparisons are rising, which means inflation is going to seem much more cooler, then I think that gold is going to really capitalize from then on.
Does this Ukraine face-off have any impact on the Fed's thinking? I mean, that seems like a stretch.
Well, it's not necessarily about the Fed's thinking and their messaging so much, but it's about the probabilities that the rate market is extrapolating. And what we're seeing with the rate market right now is a probability of 50 basis points at their hike in their March meeting. It was up to about 60 to 70% over the last week and a week and a half, has now eroded to 30%. So we're seeing that take effect across the rate markets, and now it's much more likely to only see 25 basis points from the Fed in March.
How about the grains, the soft commodities? Are you interested in wheat with Ukrainian exports possibly jeopardized?
Well, this is, again, I think there may be a little more uncertainty there just because of the export potential. But again, we're not seeing wheat with all this heightened geopolitical news take out the January 25th high. Yeah, wheat in Russia account for nearly 1/3 of the wheat production around the world. So there is some concern there, but I don't think that this is the time to be getting bullish wheat.
Why not? I mean, couldn't there be a supply crunch?
Well, because markets are fairly efficient most of the time. And if you're chasing things upon the supply crunch hitting the news, you may hit it 1 out of 5 times or 1 out of 3 times, but those are not probabilities that I favor.
How about the metals? Aluminum, of course, is in focus today. Russia is a major global supplier. Nickel also moved higher, trading near 10-year highs. Are you interested in metal moves because of this tension over Ukraine?
I think there was and will be opportunities to be long some of these base metals, and we have great exposure, on our future side as well as my wealth management side in those assets. But I'm not chasing those levels, not chasing that exposure here at this moment in time.
And broadly speaking, what will commodity traders be focused on this week, apart from Ukraine? I presume Ukraine will be the main thing on the menu.
Yeah, there was some interesting news. The flash PMIs, I think, were pretty good. And what does that mean? What could that do across the rate market? But really, I think the major focus, if you look broadly, not just commodities, but the equity market, the equity sell-off did not start on Ukraine, Russia. The equity sell-off really started with high multiple names beginning to, move lower, the Fed becoming more hawkish. The Fed is really in the driver's seat for the markets for the longer term. This is just more of a near-term move. And I'm looking for peak capitulation across points. So that's what I'm really looking for over the next couple of days and the next 2 weeks. Look at crude oil. It traded to a new high. Does it close out and continue that new high? Mentioning those levels, 93.50, 93.83 again. Things like the NASDAQ did go lower overnight in the holiday trading session. Do they close below the January lows? Gold, does it get out above 1920, 1930? These are all big moves that have taken place during this tensions and these geopolitical unraveling over the past couple sessions. So I'm looking at, do these continue to signal that there is further gains or further losses ahead?